Key reversal bars, bullish. They are a type of reversal action very similar to that of hidden tests. They have spring characteristics that occur in a weak reaction rather than support. So it dips below the previous bar to reverse and close firm, preferably above a previous bar and or a wide spread. And as a bullish setup, more favourable in an uptrend as it increases the odds of success. So let me explain that for you quickly. A hidden test, as we know, we're coming down and then we might hold a local level of support and we print a bar like this. This is our hidden test. Dip under local price bars. Then a spring is we could come down, touch here, round over, come back down, reverse, dip under, and this will be our spring bar. The important thing here is that we have white space in between. Here we dip under local bars at local support. Now a key reversal bar is that we are coming down. We are in a diagonally, we're coming down. We're in a diagonal move. We're not at support like these two bars. It's the hidden test. That's the spring. And this is the key reversal. We may come down and we might pop like this. Don't have to close above the previous bar, but we do want to see the spread, the dip down to be of significance. We want it to close, we want it to dip under quite a lot of the price action to reverse and close firm, like so, in a diagonal move, trending down. This would be a bullish key reversal. So hidden test, local bars at support, spring as we know by now, white space in between, anchor points, volume. Here, key reversal, we're coming down. Let's go on to an actual example to help clarify these concepts. Key reversals, oil futures using a 60-minute time frame. Now A here, this is our key reversal bar. Now no volume was used so that we can identify the behavior in its natural state. Is there enough data on this chart to pull the trigger for potential trade? I'll give you a couple of moments. And the answer is yes. Let's just add a couple of annotations. What do we note? Well, we struggle here, yet we break out to the upside with good selling quality, wide spreads, closing firm. And as we do struggle here, what do we note? Rising lows. Unsurprising that we break to the upside. Okay, it does struggle here around this B area. However, as I said, the market hints towards higher prices because we are rising. Okay, we're kind of building cores like an apex here. Then as we react from C to D, what do we note? Spreads narrow. Little mini up bars, close off the lows, close off the lows. There's no real selling of good quality. So we have this buying behind us, then this selling of poor quality. Then D. What happens? Buying emerges at D. No downside follow from this bar, which breaks this level of support. Then D reverses that action to break over here and close firm. So demand has clearly entered at D. Then from D here, we kind of push down, but the move is choppy. We have down bar, then a smaller down bar, then we come down, we close off the lows. Then we get a good weak bar, and then we close mid bar, then we close mid bar. It's struggling here. So the market is struggling to come down after we have seen good buying in the market. So the buying quality from B to C is much better than the selling quality from D to here. C, close off the lows, close off the lows, close off the lows. Here, pushing up, close firm, close firm, close firm. Okay, see the difference. We can draw a line through this price action. We can't here. We're making upside progress. Here we're trying to come down and we can't. Big difference. Then boom, bar A, our key reversal bar. It dips down under this action to reverse and close firm near on the highs and above the previous close, deep into this bar. Now think logically. The nature of a key reversal bar is to test for supply, and it does so. Where does it test? It tests in here. Now this is a very important concept to understand. When we have a congestion area where there's a lot of pumping up and down, we know there's been a battle. There's been a lot of buying and selling. Hence we're stagnant and we're trading sideways. Here we have a resolution where we break to the upside. Here we're building bullish cause. However, as we noticed, there is selling in here. There has to be selling in here. And look, close off the highs, selling. Close off the highs, selling. Close off the highs, selling. We push up on this bar, very next bar, we close way off the highs. Okay, so there is selling all in here. And before markup, they just want to make sure that there's no more supply left in the market before we resume for higher prices. Bar A just comes down right into this area here where there was selling before reversing to close firm. So A, there is a lack of supply, and B, bulls come in again to drive it back up to close firm, and this bar accomplishes a great deal. And then we take off like we should, because this is a key reversal bar. It disconfirms supply. Good. Oh, I can see a question here. Does A have to close above previous bars? But no. Okay, well, if this bar does close above this previous bar, yes, of course, this is more bullish. However, it doesn't have to. I mean, if we say we drop down a bit further and we reverse and we close here, and this bar isn't here, then no, I wouldn't buy that bar, because it doesn't. Don't forget, from session 2, what does the bar accomplish? Here we dip down to reverse, but we only just managed to close it back above the lows of this bar. But what does this bar achieve? What does bar A achieve? Well, it closes deep into the previous bar. It closes above this close, and then it closes above 1, 2, 3, 4, 5, 6, 7, 8. It closes above, well, not 8, 1, 2, closes above 6 lows, deep into the previous bar and the close and that close. It achieves a great deal. Now, importantly, we're in a downtrend. We're making lower prices. We would expect perhaps more continuation to the downside, not a strong bar like this. So bar A accomplishes a great deal. So we don't need a firm close to tell us it's bullish. We are testing here where we find no further supply, and it tests here. Why are we testing? Because we can see supply. We know there's a struggle due to the choppy behavior, but it resolved in a big strong move with buying. Then as we come back down, there's no supply. We can see this in the price action. No real quality, no selling quality. There's demand here. Then we thought, okay, we'll come back just to in case. Then as we do, it's very buying off the low, buying off the low, buying those, dip down, no close firm. Above all this action here and a couple of lows, bang, we can buy this bar comfortably. And as I said, if this bar wasn't here and we went down and we closed here above this low, I wouldn't trade that. it's too ambiguous. We should be trying to trade with the obvious. Okay? Key reversals do like to test, or can test, areas where price has been choppy, because it is both an area where buyers and sellers have been active. And if there's a high volume area we do get a resolution because we break out to the upside, and this is not a fake break, we can tell from the price action. However, they brought it down because they just need to test before high prices and look at the response. Now, I'm not saying that we'd always get a response this strong, but more often than not we should get a very good move, because the nature of this bar disconfirms supply. So if we disconfirm supply where there was supply, and we can see that there is no genuine supply in the market with evidence of buying in the background, then we should be taking off to the upside. So this action is of no surprise, although a gift. Okay, good question.